Hi, this is the ratehub.ca mortgage payment calculator that you can find online. I like it because this calculator gives you a comprehensive understanding of the costs involved in buying a house, from the down payment to the land transfer tax to the lawyer fees. That way you know how much money you need to save up in cash that you will owe on closing and what you will need to pay monthly in mortgage as well as other expenses after you close. So let's start over here with an average house price of $510,000. That was the average house price in June. Why not try it here? Type in $510,000. The next thing you look at is the down payment. These are the four scenarios depending on the amount you have as a down payment, either 5, 10, 15, or 20%. Next, you'll have a look at the mortgage insurance. By the way, if you forget what any of these terms mean, just put your cursor on the question mark and it'll remind you what it means. In this situation, mortgage insurance is a default insurance you must pay if you have less than 20% down. As you see here, it breaks down the cost depending on the percentage down. So, if you put down 5%, you're going to owe $13,324 in mortgage insurance. 10%, $9,180, and so on. Of course, as you see here, at 20%, you don't need mortgage insurance, so it's zero. The next thing to look at is the amortization period. So that's a fancy word to say the length of time it will take the borrower to pay off the mortgage. The higher the number, the lower the monthly payment. So if you see here, I've pre-selected 25 years. If you look at 5 years, look what happens to the monthly payment. Of course, this is for people who want to pay off their mortgage very quickly and retire early if they're rich enough to do that. So let's pick a normal number like 25 years. And that seems to be the most common one. And you see right here, for 25 years, it says $1,950. Or $1,950 per month. But let's back up a bit. How do we get that number? Now, for this, it's best to speak with a bank loan officer or a mortgage broker to see what you qualify for, because each situation is unique. Each person is unique. So sometimes you can get a higher rate or a lower rate depending on your income, your type of job, and your credit rating. So definitely speak to a mortgage broker about this. So for the purposes of this exercise, I'm going to choose a random one. I chose a fixed rate. That, remember, is the amount that does not change for the duration of your contract with a lender. So the percentage interest stays the same each month. The amount of time that you have a contract with a bank or a lender can change. You can choose between 1, 2, 3, 4, 5, and 10 years. For the purposes of this, let's pick 5 years. And of course, we're in the province of Ontario. Let's select the highest number here. I don't think that's the reality right now, but of course, let's just do this for the exercise. So here we have it. That's how I picked that. It was a 5-year fixed mortgage, and a rate of 309 gives you this amount of money. Next, let's look at the land transfer tax. These can be quite hefty, and it's important to know ahead of time that you will owe this amount on closing. So this is when you actually get possession of the house. This amount will be due. In Ontario, and specifically in Toronto, we have 2 land transfer taxes, a provincial one and a municipal one. If you're a first-time buyer, which means you or your spouse or partner has never owned any home anywhere in the world, then you qualify for a rebate. This button here will calculate the exact amount for you. There you go, click of a button. Now your land transfer tax is due for $6,875 if you are a first-time buyer. But let's pretend you're not. And you owe $12,600. That's a lot. Right, so once we've done that, let's take a look at the cash needed on closing. How much money will you have to save up in order to buy a house for $510,000 depending on the down payment that you have? So for the purpose of this exercise, let's choose a house. The down payment would be $76,500 at 15% down here. Of course, that means you have to pay mortgage insurance. There's PST on mortgage insurance. Of course there is. You're going to pay everywhere, aren't you? So that would be $645. The land transfer tax is $12,600 and lawyer's fees $1,000. Remember, this varies depending on the lawyer, so shop around. There's some good ones and I can recommend them to you if you like. And as a matter of course, lawyers will purchase title insurance for your home. So as you see here, the total cash required for this scenario is $91,255. So that means if you're considering buying a house at $510,000, you're going to have to save up $91,255. Other cash considerations like home inspection fees between $300 and $500 and appraisal fees of $300. So you could tack that on to $91,000, it could be close to $92,000. That wraps up a practical guide to using mortgage calculators. I hope this helped and wasn't too dry a topic. If you have any questions at all, shoot me an email at danielle@bosleyrealestate.com. Thanks for watching.